Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, and we're going to be doing a discussion on the market cycle ROI. We're going to be looking at it as measured from the bottom, as measured from the halving. I thought it would be a good time to go ahead and give a bit of an update. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. So we discussed for a long time the idea that this cycle will not keep pace with the last one. And we are finally seeing that potentially play out, okay? Potentially play out. But we cannot yet be sure. I've always speculated that, we will ultimately see diminishing returns and lengthening cycles. But right now, we're actually still on pace with the last cycle if you measure it from the bottom. So again, I've always said, hey, this is what I think. I think we're going to have a lengthened cycle. I think we're going to have diminishing returns, but we're going to keep an open mind. And we're going to continue to keep an open mind because right now, as measured from the bottom, we were actually essentially at the exact same ROI that we're at today, okay? My speculation continues to be that we will not ultimately keep pace with the last market cycle. I do want to clarify some things. Okay, so the first thing is that lengthening cycles and diminishing returns are not necessary, they don't necessarily have to be coupled. You could theoretically have diminishing returns and non-lengthening cycles. You could have lengthening cycles and no diminishing returns. You could have neither lengthening cycles nor diminishing returns, or you could have both of them. I think we're going to have both of them. If the market cycle peak were in fact 64K, and let's say we don't put in a new all-time high for like 3 years or something, then what we would say in that case is, well, we had diminishing returns, but we didn't have lengthening cycles. If by the end of the year we're starting to, we're not necessarily going back down to ridiculously low prices, that would be like an 85% drop from the prior all-time high. If we're maybe trying to pick ourselves back up and slowly trend back upwards, not necessarily putting in a new all-time high, but we could speculate that maybe we're at least seeing lengthened cycles. If in fact we are able to put in a new all-time high, let's say within the next 12 to 18 months, then we could definitively say, okay, well, we're getting lengthening cycles, but then we don't know if we're going to have diminishing returns until later, whenever we get that final market cycle peak. So we should say there is a difference between lengthening cycles and diminishing returns. I think we're going to have both, but again, it's possible that we don't, and I think we need to keep an open mind and stay flexible as we continue to navigate this market cycle. Now, remember, as we said before, another thing I want to say with diminishing returns is I think there's a misconception when I talk about diminishing returns, what that means. Some people have, I think, misinterpreted it, and this is probably my own fault, as being we always have to stay below the prior cycle. Well, this is clearly not true because at one point we were ahead of cycle 2, and we've been saying that for a long time. I mean, since 2019 we've been ahead of cycle. Since 2019 we went ahead of cycle 2, but then we ultimately did not keep pace with it. Now we were ahead of cycle 3. Again, I think we're not going to ultimately be able to keep pace with it. So the idea behind diminishing returns is not that it can't ever go above a prior cycle. If you look at cycle 2, it more or less stayed on par with cycle 1 for a while before falling off. Even cycle 3 at one point was ahead of cycle 2 very early on, but we would still look at this and say it has diminishing returns. If, for example, this market cycle did something like this, where it slowly came out here somewhere, we would say, all right, well, it does have diminishing returns, even if at some point it was ahead of cycle 3, even if at some point it was ahead of cycle 2, and I believe at one point for like a few days, it may have even been ahead of cycle 1. So to say that, you're not getting diminishing returns just because, well, today it's not diminished, well, that's not the point. I mean, that's not really analysis, that's just stating a fact, right? I mean, yeah, we know that the returns as measured from the bottom are the exact same as the last cycle so far. That doesn't invalidate diminishing returns. It just means that you're stating an obvious fact. That's not actually analysis. That's just stating a fact. So far, you would in fact be right that as measured from the bottom, we have not experienced diminishing returns when compared to the last market cycle. The analysis that we've done, the very dubious extrapolation that we've done, suggests that we will in fact experience diminishing returns. As measured from market cycle bottom to the market cycle peak. I mean, I don't make any claims to know exactly how we're going to get to that market cycle peak, but that's the whole point, is to say, we very well likely experience diminishing returns, and in addition to that, that doesn't necessarily mean that we can't have intracycle volatility that temporarily places us ahead of prior cycles. It's just that it ultimately won't hold out for that duration. The other thing I should say with diminishing returns is I've seen a misconception. I've seen some people say, well, the diminishing returns is not true, but it's going to go to 100K in 2021, and then we're going to have a bear market. And then I'm thinking, well, I think this is a misconception about what diminishing returns is and how you decouple it from lengthening cycles. If Bitcoin went to 100K in 2021, and then let's say it had a 1-year bear market followed by a 1 to 2 year reaccumulation phase, similar to last cycle, then we would look at that and say, well, it was diminishing returns, because as measured from the bottom, Bitcoin would need to go over 100x up in order to not see diminishing returns. And so, the idea that we need to go 100x up from the bottom would put us at around $310,000 if you measure it from the bottom of the wick. If you just go to the daily closes, which is what I'm using here, it would need to go to maybe $322,000 or so, or somewhere around there, right? Somewhere around there. So 100K market cycle peak would still be diminishing returns. 150K would still be diminishing returns. Technically speaking, 200K would still be diminishing returns. And remember, being technically correct is in fact the best way to be correct. Okay? So the hand-waving notion that a 200K Bitcoin is not diminished returns is simply not true. If you measure it from the market cycle bottom, and we're not at $300,000 by the peak of the cycle, then we did experience diminishing returns. Now, once you start to get into the 250 range, then you could argue potentially that we're not seeing diminishing returns. You may say, well, Ben, why is that? I mean, if we don't go up 100x and let's say we put in an 80x or something, a modest 80x, then why is that not diminishing returns? Well, it might not be, depending on where you measure your market cycles. Okay, I like to measure it from the bottom, but we can also respect the fact that other people like to measure it different ways. And cherry picking one type of analysis to suit my own speculation as to what's going to happen is not necessarily the best thing. What we could do is we could again measure it from the halving. Some people like to measure it from the halving, which you should note essentially completely leaves out this first cycle. If you measure it from the bottom, it completely leaves it out, which I don't like to do because I feel like leaving it out is cherry picking data to form it basically cherry picks data. Therefore, you might come to a different conclusion. Even if you ignore this one, I mean, you can still see we're seeing diminishing returns and lengthening cycles. Even if you look at it from the halving, you're seeing diminishing returns and lengthening cycles. So it still eludes me why diminishing returns is so far-fetched of a concept. Now, I know I'm probably only speaking to like 10% of you, so maybe that's something I should say as well, because some of you are probably like, why is he still harping on diminishing returns? Like, everyone knows diminishing returns is a thing, but not everyone does. Okay, not everyone does, and logically, if you think about it, if we don't have diminishing returns and Bitcoin just goes up 100x every 4 years or something, then it is, or even if it did it at a lengthened pace, it would only take a couple decades for everyone to be billionaires. So it doesn't make sense. Okay, diminishing returns make sense from a fundamental perspective, from the idea that it takes exponentially more volume to sustain the same market cap, or to sustain these higher market capitalizations. It makes sense. It makes sense that you're going to get diminishing returns. It also makes sense if you measure from the bottom, or if you measure from the halving. Okay, if you measure from the bottom, diminishing returns. You measure from the halving, diminishing returns. Yes, it's only 2 data points. Yes, this is only 3 data points. That's exactly why it's dubious extrapolation. If we had 100 data points, then it wouldn't be quite so dubious. But it's dubious extrapolation. We have 3 data points here. We have 2 data points here. Okay, so we look at this and we say, well, Ben, this has been a pretty hard draw. Does that make a whole lot of sense? Yeah, I think it does. I mean, you remember, each cycle will be different. If you look at this cycle 1, as measured from the halving, as measured from the first halving, this is a pretty long period where it just went down and sideways. I would not look at this entire period right here and say that that's just one big bull market. Now maybe you would. But I would argue that, if you're going below the 20-week SMA and having a weekly close below it, which we did, it sort of puts things on hold for a while until we can confirm it as support. So I think that we are, again, in some type of cycle similar to 2013, but stretched out. And this is a key point that I think some people miss. It's not that we're going to do exactly what we did in 2013. On the contrary, I think we're doing similar things to it, but the timeline on it has been completely stretched out. We talk about this on the first of every month when we do our Bitcoin, the Beauty of Mathematics series. So if you haven't seen that, go back and watch it. You'll find a new video essentially on the first of every month. So I think that when it comes to as measured from the halving or from the market cycle bottom, I think that it makes sense that we're going to have a longer consolidation period. I think it makes sense that things aren't going to necessarily have a V-shaped recovery. The fact that Bitcoin had a death cross is the proof that we didn't have a V-shaped recovery, because back in 2013, we avoided the death cross. We avoided it. But Bitcoin also didn't just trend down for this quickly. I mean, it picked itself up by its bootstraps and it continued on. So I would argue, I would definitely argue that as measured from the bottom, as measured from the halving, there's still a good chance we're going to see diminishing returns and lengthening cycles. Now, again, you might say, well, Ben, if it's going to go to 250K, why can we still not claim it's diminishing returns if this indicates a 300K? Well, remember, we don't cherry pick here. If you measure from the halving, the price of Bitcoin around the halving was like $8,000 to $9,000, and we can see that the market cycle ROI as measured from the halving of cycle 2 was around 30x. Therefore, if it went up 30x from say 8K, that's 240K. If it went up say 30x from 9K, that's 270K. So if it went to $250,000, this cycle would put in a market cycle ROI around 30x, which would be actually really similar to the last market cycle. So you could argue that if you're going to say a 250K Bitcoin, then you could make the case that as measured from the halving, you're not experiencing diminishing returns. So I think that as we navigate this cycle, we need to be somewhat open-minded about, well, where are you measuring it from? Are you measuring it from the bottom? Are you measuring it from the halving? There's obviously two separate things. There's lengthening cycles and there's diminishing returns. One could be true, both could be true, or neither could be true. Obviously, I think that both are true, but again, we're going to have to wait and see. Now, the only way we're going to know is we need to give it a few more months, at least to start to rule out the idea that we're going to go to, this $300,000 Bitcoin by the end of the year, which I know is a pretty popular theory among people who might follow like stock to flow and that kind of stuff, this $288,000 Bitcoin. For us to go to that level by the end of the year, we would essentially need to start picking up now. Look at the last cycle. I mean, look at this one. Look where we were at this point last cycle. It was at this point where we essentially just went parabolic, right? We essentially just went parabolic. Bitcoin went up like 10x. From this point. It went up 10x over the next several months. So if Bitcoin does not start moving up, and I mean up quickly, very quickly, then it's going to become blatantly obvious that we're not getting this $300,000 Bitcoin by the end of the year. And we're going to have to wait and see if we can recuperate down here where we currently are, maybe slightly lower. We don't know yet. But if we have this consolidation period, we start to fill in this part of the chart, and then we slowly trend back up, then we're at least getting lengthening cycles, and then we'll have to wait and see if we get diminishing returns. So this whole market cycle theory, obviously we spent a lot of time going back and forth on market cycles and the theory behind them. To some degree, I guess maybe it's some type of form of entertainment for investments that we are very attached to. But we are coming up to crunch time now, and it's time for Bitcoin to make it clear over the next few months what way is it going, or at least rule out which way it might be not going. So as far as cycle 4 keeping pace with cycle 3, I still contend it's not going to happen. We should know here relatively soon. We're either going to start moving up quickly, we're either going to go to 100K by the end of the summer, or we're not, and if we're not, then I don't see there being any possibility. First of all, I don't see any possibility of going to 300K this year anyways, but if we were to say follow the last cycle, then it's still theoretically possible if we put in the same returns. Don't think it's going to happen, but we're going to keep an open mind and we're going to see how things play out over the next few months, and then we can come to a little bit more useful of a conclusion as to not say, well, that necessarily means that lengthening cycles are true, but what it could mean is that, well, we at least have ruled out the idea that we're on this, like, expected 4-year cycle where we just put in, these new peaks every 4 years. Okay, remember, the first peak was actually in the summer. Okay, this was in the summer. So we need to remember that. This first peak was after 200 something days. This one was after 600 something days. This was after over 1,000 days. So again, you're definitely seeing lengthening cycles. We're definitely seeing diminishing returns. It's just a matter of what will this cycle look like. Is 64K the peak? I don't think so. If it does end up being the market cycle peak, then we did experience diminishing returns, but not lengthening cycles. So again, we're going to keep a close eye on this. We'll try to do an update on these charts maybe every couple weeks or so. If you guys like the content, you want to follow along, make sure you subscribe to the channel. Give it a thumbs up. Remember to check out the premium list if you want to know how I'm navigating these markets. Also, check out the store. We have store.inthecryptoverse.com if you want to get like a mug or a t-shirt. Thank you guys for tuning in. Leave a comment down below. Where do you think Bitcoin's going for the rest of the year? And I'll see you next time. Bye.